Bitcoin has been declared dead 477 times, and yet here we are, talking about new milestones, new adoption, and a network that just keeps getting harder to kill. Today we're breaking down how Bitcoin got here, what changed in the last cycle, and where it's headed next, with every fact checked and verified. Bitcoin's story starts on October 31st, 2008. The world was still in the aftermath of a global financial crisis. Trust in banks was low, the housing market had imploded, and governments were bailing out financial giants. That's when a pseudonymous figure named Satoshi Nakamoto posted a 9-page PDF titled Bitcoin, a peer-to-peer electronic cash system. It was radical. Money without a central bank, no middlemen, a fixed supply of 21 million coins. In January 2009, the Bitcoin network went live. The very first block, called the Genesis block, contained a hidden message. The Times 3 January 2009 Chancellor on brink of second bailout for banks. A programmer named Laszlo Hanyecz paid 10,000 BTC for 2 pizzas. At the time, that was about $41. And today, it would be worth hundreds of millions of dollars. Between 2011 and 2013, Bitcoin was the Wild West of finance. Early exchanges like Mt. Gox handled most trades. The Silk Road marketplace made headlines for using Bitcoin. Prices could double in days and crash just as fast. In late 2013, Bitcoin hit $1,000 for the first time, then crashed 80% after Mt. Gox collapsed. Critics called it the end, builders kept building. 2017 changed everything. Bitcoin started the year near $1,000 and hit almost $20,000 by December. Google searches for how to buy Bitcoin exploded. Then came the crash, about 84% down by the end of 2018. Another crypto winter that cleared out speculators but proved Bitcoin's resilience. That same year, the Chicago Mercantile Exchange launched Bitcoin futures, the first major Wall Street gateway into BTC. In the 2020-2021 cycle, macro factors took center stage. COVID lockdowns, money printing, inflation fears, Bitcoin's fixed supply drew new attention. MicroStrategy added billions in Bitcoin to its balance sheet. Tesla bought $1.5 billion worth. PayPal and Cash App opened Bitcoin access to millions. And in 2021, El Salvador became the first country to make Bitcoin legal tender, a bold experiment in using BTC as everyday money. January 10, 2024, the SEC approved 11 spot Bitcoin ETFs in the US. For the first time, everyday investors could buy Bitcoin exposure in retirement accounts, brokerages, and through financial advisors. An ETF is like a basket you buy shares of. The basket holds Bitcoin and your shares track its prices. You don't have to manage wallets or private keys. In April 20, 2024, Bitcoin's fourth halving. Rewards dropped from 6.25 Bitcoin to 3.125 Bitcoin per block, cutting daily supply from about 900 to around 450 Bitcoin. It's like a faucet that slows every 4 years. Same demand plus less new supply can push prices higher over time. July 2025, the SEC approved in-kind creation and redemption for Bitcoin and Ethereum ETFs. This lets institutions swap ETF shares for actual Bitcoin and vice versa, improving liquidity and efficiency. Bitcoin's security, measured by hash rate, hit record highs in 2025. More hash rate means more security, making it harder to attack. Mining is like a global race to solve math puzzles. Winners add new blocks to the chain and get Bitcoin rewards. More computing power means better odds and a more secure network. The Lightning Network is making small BTC payments fast and cheap, with more exchanges adding support. By the end of 2024, 659 million people own some form of crypto, with Bitcoin leading the pack. Right now, Bitcoin is in a stronger position than at any point in its 16-year history, and there are 6 key forces shaping its future. Program scarcity. Every 4 years, the faucet slows. Right now, just 450 new Bitcoin enter circulation each day, and that will drop to 225 in 2028. Compare that to gold, where annual supply still grows around 1.5%. This predictable scarcity is one reason Wall Street is treating Bitcoin like digital gold, but with higher upside. Institutional rails. With spot ETFs now live in the US, Bitcoin is in the same league as gold and the S&P 500 when it comes to investment menus. Pension funds, endowments, and sovereign wealth funds the slow, steady capital are now able to allocate. Historically, once these gates open, inflows tend to grow over years, not months. Regulatory clarity. The Clarity Act passed on July 17, 2025 when the House signed off. Now, it's in the Senate's House. Clearly defines the SEC's role in overseeing securities and the CFTC's role in overseeing commodities, officially classifying Bitcoin as a commodity. It also protects the right to self-custody and peer-to-peer transactions. This clarity gives businesses and investors the green light to plan long-term without wondering if the rules will change overnight. Crypto and housing. In June 2025, the Federal Housing Finance Agency directed mortgage giants Fannie Mae and Freddie Mac to count regulated crypto holdings, including Bitcoin, toward mortgage reserve requirements. That means if you're applying for a mortgage, your Bitcoin stack can now help you qualify. This is the first time Bitcoin is being treated as a legitimate bankable asset in US housing finance. Macro tailwinds. For most of 2023 and 2024, high interest rates made cash more attractive than risk assets. But now, the Federal Reserve is signaling possible cuts in late 2025. Lower interest rates reduce the opportunity cost of holding Bitcoin and can push more capital into assets with strong upside potential. Historically, Bitcoin has thrived in easing cycles. Security and payments growth. Bitcoin's hash rate is at all-time highs, making the network harder to attack than ever before. At the same time, Lightning Network capacity is quietly growing, enabling instant, cheap Bitcoin payments. This combination of hardened infrastructure and real-world usability sets Bitcoin up for the next wave of adoption. Let's talk about possible future scenarios. If these forces continue, we could see Bitcoin adoption by more sovereign states, not just as legal tender, but as a reserve asset. And while there will be volatility, because there's always volatility, Bitcoin's foundation is stronger than ever. Let's talk about some myths. Myth 1. Bitcoin wastes too much energy. The reality, Bitcoin uses about 0.1% of global energy, with a growing share from renewables and wasted energy capture. Myth number 2, ETFs will kill self-custody. The reality, ETFs are for those who wouldn't self-custody anyway. Myth number 3, Bitcoin is only for criminals. The reality, less than 0.5% of crypto transactions are illicit. Cash is still the top tool for crime. I know that from experience, as I was a police officer for 14 years. All right, myth number 4, governments will just ban it. The reality, 130 plus countries regulate or tax Bitcoin. Bans are rare and often reversed. Bitcoin's arc isn't a straight line, it's a ratchet. A white paper becomes a network becomes a market becomes an allocation. That is the rise of Bitcoin. If you found this valuable, hit like, drop your Bitcoin 2030 prediction in the comments, and subscribe to the Smash Crypto Zone.